Many of you that have been following my videos know that I've been talking about the upcoming recession. Now, there are many people that believe we're in a recession. There are countries that have come forward and said they are already in a recession. The trucking industry said recently they were in a recession, and so is the manufacturing industry. Now, it looks like many other parts of the market is being impacted by these indicators that they are going by. This came out in Forbes November 15th, 2019. Spread the news, recession likely soon. Here's what to watch for. So, like they said, this one is going to be unlike the previous recessions that we have gone through. All right, I'm just going to go down a little farther. Inversion, reversion, and recession. Earlier this year, a lot of media attention was placed on the market indicator until recently was only known to those in the investment business, specifically the 10-2 Treasury spread. This simply takes the yield on a 10-year U.S. Treasury bond and subtract the yield on the 2-year Treasury note. When positive, the spread between these two is considered to be more normal. After all, if you are a bank, you win when you can pay interest to depositors, CD holders, savings accounts, etc. At lower short-term rates and lend receive interest by making loans to borrowers at higher, longer-term rates. When the opposite occurs and the 10-2 spread inverts, which they said happened already, it often indicates a problem with the economy. Such an inversion in the 10-2 spread is typically been reliable sign. So they're saying that whenever you see this inversion occur, and it did occur in 2007, and it has occurred again, that's when we are more than likely to be heading into a recession. At least that's the headline people have been force-fed. First, here is a chart of the 10-2 spread from 1976 to 1984. In between, there were a pair of U.S. recessions, shaded in gray. Notice that the 10-2 spread dipped below the 0.00% mark. Okay, and notice, all right, so now they're saying that this is very much like the recessions of the past. So in 1981, it happened again. I imagine some market historians regarded this as one big recession, in a way that if a ball club loses 10 games in a row and wins one, then loses another 10 in a row, they don't really consider it a two losing streak. All right, so now when everything looks normal, this is what the 10-2 Treasury yield spread would look like. Reversion is history. The chart above really represents the olden days of investing. The world was different back then. Technically, in global market dependence were in their infancy, and investing had not become a transparent and democratized as it is now. So now, ladies and gentlemen, this is the yield spread when it's inverted. All right. So whenever you see this, then all of the indicators will say there's a problem. As the second chart shows, the pattern is even more consistent than earlier in history. Each economic cycle saw a 10-2 spread go below zero, recover above zero, and then a recession occurred very soon after. The bottom line here, it is not the inversion that indicates a pending recession. It's the reversion, the spread moving back above zero. So we'll have to watch closely to see when that critical reversion occurs. Oh, wait, it just did. I guess we had better start focusing on it. Wow. We don't know for sure that the 10-2 spread will continue higher. However, if it does, it dramatically increases the chances of a recession. The latest reversion occurred when the spread crossed above zero around Labor Day. So they said this happened around this past Labor Day. So it has climbed by a quarter point in just over 2 months. So it's moving in the right direction at the right pace. If you are expecting a recession, that is. As with any economic indicator, this cannot be viewed in isolation. So I don't know for a fact that a recession is coming. I just know it is true that the 10-2 spread is following the same pattern that it has before every recession since the Reagan administration. That has to count for something. Keep an eye on this as it develops. So, ladies and gentlemen, these are folks that are tracking the indicators on a regular basis, and, of course, they see this recession coming. So just make sure you always have the basics, ladies and gentlemen. Some of the other perks that you might have, it ain't going to kill you to live without certain things. All you need really is the basic things to make it. And that's what you really should focus on for yourself and your families. And just try to rack up on some of the things that may be an issue in this upcoming recession. I still remember many of the articles that I read in the past that said this is going to be a bad one. And I believe it. I believe it. We are getting closer and closer to the end. We can damn near say you can expect anything to happen in this society. America is not as strong as it used to be in the past. You can even sense that things are definitely not the same. And you certainly can see it in the way many of these folks are acting out. Something is wrong. Their world is changing. And they're not going to be able to handle those changes that are to come. But those changes must happen in order for this world to make it to a whole new level. It is time for that to happen. It's long overdue. We cannot be forced to remain in this situation that represents very much the past. So, ladies and gentlemen, here's another recession story. And we had an inversion, reversion situation just this past Labor Day. But y'all, please tell me what you think. Please leave your comment and subscribe. Don't forget to hit on the notification bell, and I'll see you on the next video. Peace, family.